Okay, I think we are live. It's about time. Once again, I had to let it sit there for a couple minutes. Anyway, I hope everybody's having a great day. Welcome to the show, Naples Vice, with your host, Vincent Freeze. Coming to you from, you're never going to believe this, Naples, Florida. Anyways, what a day on Wall Street. I know I said last night that I wasn't particularly going to predict higher prices because when you're in an extended market like that and you look at any S&P 500 chart, SPY, the futures, whatever it is that you like, you notice that, this thing has just been soaring forever and ever and ever. And we actually are getting very close to a target that I talked about. I believe it was last week. It was the 3230 area. It was a Fibonacci extension before we had the little 100-point hiccup, and that's top to low hiccup right around Thanksgiving. So excluding that small pullback on the week of Thanksgiving, looking at that swing, and 3230 was a 1272 extension of that swing. So not too far from there. Now, and that's on the S&P 500 futures. I don't reference the actual S&P itself or the SPX, whatever you want to call it, because I trade the E-mini S&P 500 either micro futures or options. So that's what I watch. It's a chart I watch. The targets sometimes are different on SPX than they are on the futures. And just to clarify, because I know sometimes I'm not always very clear on all this, the SPX is the actual S&P, so the market capitalization weighted stock index of 500 large cap stocks, or the S&P 500. All right, so the price, you see it on TV, you see it on Yahoo Finance, wherever it is that you go to get your financial news. When they say the S&P 500, that's what they mean. Now, the futures, all the futures are is basically an insurance policy. They work in kind of a similar way. You use them to hedge. They're cash settled, so you bought them at 3,100 and you sold them today at 3,200. Okay, every 1 point that the S&P 500 moves, you make $50. So a 100-point move would be $5,000, and that's why I don't trade the actual ES itself, because it's way too big and way too much risk for my tolerance. But that's what the S&P is. Now the options, that's a different story. That's the difference. That's all it is. The futures are a derivative of the S&P 500 itself, and the S&P 500 is 500 of the biggest companies by valuation in the United States. So I got a little bit off on a tangent there. Okay. So basically the point that I'm trying to make is that the exact numbers that I say are for the S&P 500 futures, not the S&P 500 itself, and there could be a couple of point discrepancy in there. This isn't an exact, and the S&P futures sometimes are more expensive or are cheap to the S&P 500. It just depends on the day. Closing figures today, the Dow Jones Industrial Average, 28,235, up 100 points. S&P 500, 3191 at the close, up 22.5. The NASDAQ, 8,814, up 79 points. NASDAQ was a big winner today. Tech stocks seem to be really where all the home run is, and that's probably because of chip makers and them doing business with China, is what I would presume is the factor from here. And that leads me into, we'll go over some some other markets out of this. But this is an important story, and this is why, like I've been talking about since I started doing this again, that I don't like trading the Dow Jones. And this is probably why the Dow was so much lower. You have the S&P up, 0.7%, the NASDAQ up 0.9, and the Dow only up about with a rounding error, 0.4%. Boeing will suspend 737 MAX production in January. Guess what's a very large component of the Dow 30? Ding, 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 you got it. Boeing. All right, Boeing right now, and I don't trust the pre-market figures on TradingView, but it said we closed at 327, and I'm going to get you the post-market data on Boeing, and I should have it on my watch list, but I don't trade the Dow, so I don't really care. 327 at the close, and after hours, which those numbers can be a little bit misleading sometimes, but it's right now, as of 7:30, Boeing's down $2.80 to 324, and that's after being down $14 today. Boeing got pretty decimated. So where are we at technical wise? I'm on the weekly chart here at Boeing on TradingView. And right around this level, 328, we've had three bounces out of there. Boeing's been in quite a bit of a range between about 390 and about that 330 range, so $60 area. And that area comes as a function of when they started having all these problems with these planes making and planes crashing and things. And since then, Boeing really hasn't done a whole lot of anything. Going back in time, we had the topping pattern. We had the big sell-off back in March of this year, with Boeing coming up to a high of 445. So we're off about what is that? 440, 100 points off the high. So we're down about 25% off the high on the stock, which is, for a stock like this, yeah, they have some pretty big moves. If you go all the way back to 2016, this was a $100 stock, so it went up, it quintupled in a matter of about 3 years. So right now we're sitting in this tight range, and the rule of ranges is if we really get a hard break with some good volume below that 330 area, which we kind of have a little bit of a setup right now, but I'd like to see more volume. We probably won't see a great deal of volume as we're coming into the holidays, but if we see a hard break of that 330 area, I mean, Boeing really could be in for quite a bit of devastation. You have a little bit down here at about 290. But even if you come down to that area, you're looking at only about half of the expected move of what you'd get out of a range break. The rule of range breaks is you expect to move approximately the width of the range. So if we're going from 330 to 390, that's, a 60-point move. And that's from the break. So if we call the break 330, what we'd be expecting 270. Absolute devastation. And what would that do to the Dow? Well, you see what it did today. I mean, it prevented the Dow from being up quite a bit more, just like the rest of the indexes. Anyways, that was a story. And honestly, at this point, I expect Boeing to take a little bit of heat. Now, will the powers that be out there come in and start buying Boeing tomorrow? I don't know. It's hard to say. And I'm not trying to be the conspiracy guy here, but these guys like when stocks go up, these politicians, because it makes them look good. So we'll have to see if they really whack this thing and they get it below 330 by a pretty good margin. That could be considerable downside. And if they're going to stop making planes, I mean, that's what they do. They make planes. So that really could really do some damage here to Boeing stock, as well as really the Dow Jones Industrial Average. Once again, I'm just going to keep reiterating it. Why I don't like trading the Dow. Other markets, oh wow, the FTSE was up 2.25%. CAC in Paris was up 1.23%. DAX was up almost a whole percent. And numbers don't matter because whatever. And everybody says, you see all the headlines. Oh, well, U.S.-China trade deal, phase one. Come on. I know that that's important, but we all know it's because the central banks are printing money to death. And where's it all flowing? Since you're not seeing as much inflation in the grocery stores should be, it's all going straight into assets. Like, oh, what do you know? Stocks, which I don't really think are assets. Not these days. Not the stuff that you buy, these paper stocks that you buy. We got the 10-year yield coming off a little bit, which leads us into the futures. Which these futures here, you can get the live futures quotes straight off your like if you use Thinkorswim or Tastyworks, so whatever your choice is, you can get live futures quotes. We have the ES, pulling back about 4.5 points right now. NASDAQ not quite as weak. We got down about 10.5 points. Dow's down about 51. Dow's a weaker performer here. I'm shocked. And you got bond futures, you got the 10-year, you got the 5-year, the whole yield curve's basically soaring right now. The one thing we want to see, if we're going to get a little pullback here, is we want to see a green yen futures, which we are getting right now. Yen futures up about, I'm not sure exactly how it is that they quote the yen. I know that when you look at the US dollar versus the yen, which would give you 109.52, 1 pip is equal to 0.01. So I'm not totally sure what they would consider 1 pip on the yen futures, because the only small amount of forex trading I used to do was always spot. It was never futures. So going on to someone like an actual forex broker and using their leverage to do things like that. Gold, which, I did talk about gold yesterday. Did absolutely nothing today. Pretty much just stayed in a range all day. It was up a little tiny bit at one point this morning, and then it was down, and then it came back to about flat, still sitting at $14.80 the ounce. And silver sitting at about 17, little changed. Silver was actually up today, which I think these quotes that I get from news outlets are spot prices. I look at the futures price, because I use the options on the futures, so that's what I pay attention to when we're talking about precision. Silver was actually up, I believe, 7 or 8 cents today an ounce. So despite the fact gold went nowhere, silver was coming up. I want to see this market pull back a little bit here. Not only because I want gold to go up, and gold maybe, just maybe, will pop a little bit if, say, we get a 10, 20, 30 point sell-off tomorrow, which Boeing hopefully sparks that a little bit here. But I'm not guaranteeing that. We have crude oil down about 8 cents right now. It did close above $60 today. They did it. I mean, it truly was a spectacle to see. As soon as my chart loads here, yep, closed above there. And that's, we're right there, right at that level I've been talking about for as long as I started doing the podcast again. We're pretty close. I think a close above 60, honestly, is probably sufficient enough. Because 60, for any other technician out there, they're always they have an obsession with round numbers, and there's a little bit of excuse me. There's a little bit of sense, there's a little bit of logic to that, because usually all the noobs, all the retail people always put all their limit orders right at even numbers, and you get these algorithms that come in here and start hunting all the stop orders and all the buy orders and everything right at the even numbers. But it got above there today. So oil is right there. Aside from that, I mean, it was a pretty quiet day out there. Nikkei's up, you know, everything just soaring. Yeah, so we're going to hope that we get a little pullback here in the ES because I want to get back in. I don't think this thing's done yet, but I'm not buying here. This leads into the next subject that I wanted to talk about tonight after I have a little bit of water and see if this would be the perfect time to cue a commercial break. Okay, so I want to see a little bit of a pullback in the ES. Maybe we go up another 30 points and hit that extension. It's hard to say, and I can't call it. You know, spending time trying to call prices it's ridiculous because you don't know what's going to happen. You can set reasonable expectations and you can set parameters for your trade. But all these people would say that they know what's going to happen, and nobody knows anything. And if you think you know something, you're going to get killed doing this. They're going to take all your money. That's just how this game works. So I want to see a pullback in the S&P, preferably. Obviously, I still like that 30-24 area. I apologize. Would be my superb area. But I don't know. At this point, I think that might be out of the question because that's pretty far back now. If we pulled back 200 points, I almost might be a little bit concerned at the integrity of this trend. But I would be comfortable coming out here and looking at right there, about 3150. That's 40 points. That's reasonable. It's not as quite as intensive of a pullback as we saw before. Excuse me, but that's about 40 points from where we are right now in the ES. And that knocks a little bit of these longs out of here because if you look at the put-call ratio, I mean, it's a soaring. They're buying calls all over the place. And they're starting to get a little too leveraged to the upside at this point. And I don't particularly like to see that. Even if we go into the trend, they actually didn't get too extended today. Came right back to the even mark. Yeah, they're buying yen futures like crazy right now. Beautiful. Anyway, 40-point pullback in the ES. That's the level that I would like to see to be interested in possibly buying. If they bring them back down to around 3150 and we start to see interest at that level, yes, I'd be interested in buying. And no, I'm still a big stock market bull. Big time. I think this market has everything going for it right now. I just don't want to get back in until we see a little bit of selling here. And at this point, maybe we're going to have that. It's still early. I mean, these markets, the U.S. markets, aren't always the most liquid at this hour because you get most of the liquidity during the U.S. session. When China opens at 9, sometimes you see a little bit there. But for the most part, there's not a lot of action at this hour, so that 5 points could easily be erased by a tweet. The Federal Reserve saying more about eliminating any kind of limitations on repo orders. It doesn't matter. So that's what I'm looking for. And the other subject I wanted to cover is a little thing called complacency. And with the S&P 500 now rallying, you at the very, very bottom print before this rally started was 28.55. So we've got almost a 250-point rally here in the S&P. And what happens, and this is why most people lose money, is they want to buy something that goes up. It doesn't matter how long it's been going up. And I agree. I want to buy things that are going up too. But I want to buy them when they're starting to reverse from a certain area while they're going up. So when we're seeing a pullback after something's gone up for a while, it looks like a strong trend. Fundamentals support the technicals, with like IE with the Fed here. Right, that's the kind of thing that I want to see. Is a fundamental picture with some kind of pivot point in the chart. So what happens is people just start buying, and you see, like when you look at a lot of charts, you see the most aggressive price movement at the top and bottom. Like for example, with the S&P 500, I'm going to go to the weekly time frame here. I can't illustrate the figures. Next time I'll make sure I have all these figures. Okay, back to the daily chart. All right, the first portion of this move, right, if we're starting from the very bottom of the move at 28.50, which would have been back in October the 3rd, we ran, touch screens. Okay, we ran 200 points in about 2 months. Now looking at this after the pullback, I'm looking at the very bottom of the pullback. So if you bought at the very bottom of the pullback, we've got 30.72. So this has rallied 120 points in literally 2 weeks. So you've got about half the move in about a quarter of the time. And that tells you that these buyers are starting to get a little bit too eager in here. And usually this is the part of the move where an Elliott wave, this is the fifth wave, which is the sharpest wave to the upside. The third is the longest. And typically you get the largest price move in the third, but in the fifth you get the sharpest because you get the most amount of points in the shortest amount of time. And the reason being is that everybody starts piling in, everybody starts buying, and eventually they run out of buyers, and then you get a little bit of selling coming in, and then selling always increases and gets worse and worse. As it goes down, the law of gravity applies to Wall Street, if you've ever heard that saying. There it is. So that's why I'm a little bit concerned right now, is like just the absolute speed that this thing has been moving at. Now, yeah, I apologize. I have like Florida allergies. So that's basically my outlook on the S&P 500 right now. Not a buyer, waiting for a pullback. If it never pulls back, whatever. I got plenty of other stuff I can trade. And crude oil, I'd love to see a pullback of about $1, $1.50. I'd be a buyer there too, because I think oil's going to keep going higher. It's risk on time. Soybeans, yeah, I wouldn't touch those. Same deals with the S&P. They knocked there's a lot of they call them managed money in the futures world. Excuse me. That's like hedge funds, investment managers, all those kind of people. They had a pretty big short position actually in the soybeans. And all this news has really just started to knock all these guys out. I think that maybe by the end of the week we'll be pulling around in soybeans. The next resistance area in the soybeans I have on the continuous contracts, 928. Beans are sitting at 922 right now, so we'll see what happens at 928. The ideal situation in beans is we go up, fail at 928, pull back to 912, and then start buying some calls or maybe sell a put spread or something of that nature. Other than that, I think that's going to go about do it. Pretty quiet day on the news front. S&P 500 just doesn't want to stop. We're waiting for gold to pop off a little bit. And hopefully this little bit of red that we have on the screen in the futures right now materializes into a 40 or 50 point pullback. So, from Naples, Florida, Vincent Freese coming to you. And like I always say every night, let's make some money. Have a good one.